Wonderful good day, ladies and gentlemen. Precious Metal Summit 2015. We are still in Zurich here, day 2, and with me is a very prominent company out of Peru, Inca One Gold, and George Moen, the Executive Senior Vice President of Finance, will give us an update.
Absolutely.
And what's going on there? George, welcome.
Well, thanks for having me. We're here at the Precious Metals Summit, and it is busy today. Yes, couple days, so we're really happy to be here. Come every year, but in this great studio. So
Super.
Thanks for having me.
Thank you, and thanks that you are here. So, Inca One, we have already done, I think, like 15 to 20 videos with you guys. You always delivered what you said. That's important. Yeah. And you are, I think, the single largest shareholder of the company, even.
Yeah, one of them now, yeah. Absolutely.
And we saw the last week some nice acquisitions, some nice buying. So, comment on that, please.
Well, thanks very much. It's been exceptionally busy at Inca One. Acquisitions, as you know, don't happen overnight. No. We've been having our eye on a number of targets since we've gotten Chala into production, and they take time to put together. So we had 5, 6, 7 targets, talked with you, and in the last little while, we basically closed on 3. We were able to buy a private Peruvian desorption company, of which we bought, ran for a while, and then relocated it up to our plant in Chala. Because we were outsourcing desorption. We wanted to make sure that we took that under our own roof and control, got that done. And then...
Shortly, what is desorption?
Desorption is when we basically, after we take the carbon and we take it into a concentrate. And that was after we've processed it in our tanks at the mill, for those who
so do you have
don't know.
Control of the whole process?
And lowered our cost, greater recoveries. We just saw a very immediate positive impact to our operation as a result of that significant first step. And then 2 other companies in the public sector, both TSX listed companies, Standard Tow Milling and Moen Mining. They were also in the same space. We've been talking with both of them. Standard Tow Milling had this great location in the north near the high-grade ore, had built a state-of-the-art plant. But, you know, like anything else, during the summer, it was a little tighter for some of these companies to get additional capital. And we looked at the rationale by having Standard join us. It made perfect sense. That was a great acquisition for us and for the shareholders of Standard. We were able to deploy and put to work the $2 million ore note fund that they had put together. So we immediately injected and started working with Chala. And it also had a great plant, which we bought at a very favorable price. And there's a couple of features, including a very large desorption plant. Our intention is to take that plant and, again, add on to our desorption facility component down at our Chala operation and centralize that whole process. So, and it also was near the ore, and so it comes with an ore buying team, some very good executives, some which are going to remain with us as we move this program forward. So that was a very accretive program for Inca. Now, we're really excited about that. The Moen Mining Group, they're only 45 kilometers from Chala. We've been talking with them. They had some changes in their organization, and they approached us. We negotiated a fair price for what will be our shareholders there, and so we acquired them, and that gives us immediate capacity. We bought assets within that company. We bought primarily the biggest asset, of course, was getting access to their big 100-ton-a-day plant, which is in production as we speak and can be scaled up. They came with a small mine that has the ability to supply some of our ore feed, not a lot, small to start with, and also comes with exploration property that, you know, it's not our focus, but that was part of that asset acquisition. What's very cool about that is once, with the capital we got in from Standard and some of the other capital that's coming online now, we were able to get Chala up. So Chala will have a capacity problem shortly. We want to expand Chala, but that will take some time. So the acquisition of the Moen operation gives us immediate access to twice the capacity, and we want to basically put those 2 plants into production first, get them both to 100 tons, and the Standard operation will act for the interim as a depot in the north to access that high-grade ore. So that's kind of how we're melding these 3 assets together to make it more efficient, lower the overhead. It's cheaper to run one public company than three.
Absolutely.
Downsized a lot of the triple overheads that we had, brought in some of the team into what's already a very established team in the Inca One office in Peru. So lots of rationalizations of cost, and the markets liked it. We've talked to shareholders on all of the various companies, and it's been well received by everybody involved.
Okay, so as we know, acquisition costs money. How do you finance the whole thing? I mean, you paid with some shares.
Yeah,
also?
the bulk of it's been shares. I mean, the attractive part of a public company is that we can issue, and in this case, and you know, we've issued shares for hard assets. This isn't expense money. This isn't being punched into the ground with the hope of getting something. We
know already that's there.
We've acquired substantial assets under replacement costs, so very accretive overall for our shareholders. So that was we think a very smart move on our part. It's a time for consolidation in Peru, and we just saw that. And the timing was right for all of the companies, and we are continuing to look for high quality targets that can add to our capacity over time.
Great. I saw something like the OR note backed.
Well, that's
security.
Absolutely.
What is that?
Well, you have to, in this business, I mean, we're like a trading company, like a Trafigura concept, except we have incredibly better margins, right? So you have to finance that ore. And the nature of our business is that we have to buy the ore from the miners, and from the time we buy the ore to the time we get paid, we're looking between 40 and 50 days. Now, we've established clearly that we need to have $5 million US per 100 tons of production working capital. And in Inca now, we've had, with the acquisition of those ore notes, we had originally started a lockbox / ore note strategy way back when to get us started in Inca. Standard under the tutelage of Len Clough, he really developed the background, the security, and had taken it to the next level. We've even tweaked it even further, and so we're going to be able to finance all of our ore now and in the future with this type of vehicle. So each time our company will require capital, we'll go back to the markets with this structure. So it's very flexible, and it's timely. It's in the context of the market, and that will be our strategy moving forward.
Fantastic. So strategy moving forward. That's also a key thing for 2016 and 17. So I think we can say that at least you will have 200 tons per day.
Absolutely.
Least, yeah. You can raise it maybe to 300 by end of next year.
Well, let me tell you what our strategy is. Right now, with these two plants, we have 300 tons of permitted capacity, means that's what we have with these acquisitions. 200 of it's commissionable, which is either in production or can be put in. Montana has operated already, right? So we'll have 200. Now, all of these plants have the capability to go to 350 tons. We'll simultaneously permit each of these plants to that phase. So a couple of years ago, if you remember, we were telling investors we want to be 1,000 tons of production. We now have the footprint with these other two acquisitions.
Easy, yeah.
350, 1,050. So there, we now control our own destiny. Now, our intention in 2016, our plants are continuing through the permitting process. We believe by the end of 2016, there's a very good chance we'll have another 200 tons of production, bringing us from 200 to 400 tons of production in our various plant footprint. And then after that, we can conservatively suggest that, given our strategy, that another 200 per annum would be a conservative march forward. So we see a very short path to a 1,000-ton production facility, and at 0.7, that will generate 300,000 ounces of gold a year.
That's a lot.
That is a lot of gold. But
yeah.
but there's the resources are in Peru, in all of the thousands of mines. You see, our company doesn't necessarily have a mine risk, right? We have a sales risk, but we know where the gold is. We just go talk to the miner. So our job is to sell them on our service and the features. And the one thing that we can do with the sufficient working capital is pay them quickly. A miner wants to mine. He wants to get his ore to our plant, he wants a fair price, and he wants to get that money into his bank account so he can go back to us what he does best. We want to be good millers. We want to make sure we maintain good, solid margins that we've achieved, and we want to have the ability to do that on a regular basis. Because if we become a reliable payer, a fair payer, with transparency, with our own facilities and our own labs, we think that gains us. And in multiple locations throughout Peru, which is unique, this gives us a distinct advantage over our competitors, both in the private and the public sector. So we're expanded. We're in the, as we said, we're in the consolidation mode, and now we're in the optimization of our existing footprint. We don't have to wait years and years. We're there.
That means you are the consolidator of the industry, and
One
you
of them,
are the, let's say, processor of choice.
That's what we've always mantraed, and now we've got the footprint that can take us there.
Perfect. Great. George, thank you very much.
Thank you very much for having me.
On that.
Awesome.
And keep fingers crossed that you really can,
well, you know what? Now
process what you said,
Absolutely. Well, you know, as I'd like to just wrap up by saying, you know, you go through phases in this business. First of all, can you build a plant? We did. Can you find enough ore? We did. Can you dial in the numbers and be profitable? We did. Now can you grow? That was what the market wanted to hear. And in the last month, we closed on 2 very quality assets that we can demonstrate that. So we've done and delivered on every one of those major metrics.
Absolutely.
Yeah.
George, thank you very much.
Thanks very much,
Perfect, as always.
You bet.
Ladies and gentlemen, it was George Moen, the Executive Senior Vice President Finance of Inca One. And I think he did already the perfect summary, so I really mustn't do that. But what I wanted to point out is that this company, at each 100 tons they produce per day, they roughly make something in the order of $6 to $7 million per annum. So think about it when he's talking about 300, 400, 500 tons, even 1,000 tons per day, what this means for the profit and the future profit of the company, and in conjunction with this small market cap they have by now. Check out the company. Thanks for watching us. Bye bye from Zurich.
Thank you.